Well, welcome back. Continuing to listen to the weekend edition of the KE Report. In this segment, I am joined by Jordan Roy-Byrne, founder and editor of The Daily Gold. And Jordan, what we're going to do here is kind of recap some of the major markets and relate what they're doing and expectations to what can happen with the gold price. Something I tried to do at my recent presentation at the resource conference that was held in Vancouver a couple weeks ago. Let's first start with the US dollar. As we're recording this, about the middle of the week on Wednesday, we're seeing a fairly significant one-day pullback on the dollar, down about 0.73, let's say, still above 94, but the fact of the matter is the dollar has been on quite a nice run, and even with the pullback today being still above 94, I think is noteworthy. However, we are getting a lot of back and forth. I hear, honestly, from just as many people that the dollar is going to be breaking down, as on the other side, a number of people saying this dollar strength is noteworthy and could actually run higher. Where do you stand on this argument?
I think, judging by the strength of this rebound, Corey, I think it's more likely to run higher than break down. And one big reason is the non-confirmation it had with gold. I mean, this has been true almost in every case except for the 85 to 87 cyclical bull market in precious metals. But aside from that, the majority of the time, gold really leads the dollar as far as major moves. And remember last year, the dollar was down. It made two new lows in a series of 8 months, and gold did not break out to a new high. So that's a huge non-confirmation that's very bullish for the dollar. And so what do we see? We see, even after that, we see gold struggling to break out, and we see the dollar having this. I mean, this is a really strong rally, going from 88 to almost 95. It may have touched 95 yesterday. But I mean, that is a very strong move. Just I mean, it really happened most of that move really happened in just a month. So that's a significant move. I mean, it's back above the 200-day moving average, and comfortably so. Sure, I mean, sentiment has got red hot. It's really overbought in the short term. But when you see a new trend or a rebound that becomes a new trend, you actually want to see it get really overbought. You want to see sentiment get really over bullish, because that's the sign of a bull trend in a strong market. That's what happens when you're in a strong market. Whereas the reverse is, it kind of has a weak rebound, it fizzles out at resistance, and it doesn't look that overbought. I mean, that's different than what we have here. And I mean, the dollar had resistance at 93 and 94. And 93 being the major immediate resistance target, and it just went right above it, no problem. Same thing with 94. As I said, I think it may have touched 95, but it is reversing here. And the real key resistance, Corey, is going to be in the mid-95s. That's where we have the 40-month moving average. And if I'm using a band of really long-term moving averages, including the 40-month moving average, those moving averages all kind of coalesce in the mid-95s. So that's a real significant area as far as after the dollar has this pullback here and now. If it can challenge and go above that resistance, I mean, if it can go above 96, then that would be a signal that, we're not really in a bear market anymore for the dollar. So I know that's a lot to handle for the listeners, but here and now, I would say the path of least resistance for the rest of the year is probably going to be higher instead of lower. And I mean, you just have to look at what's going on in Europe. And I mean, it doesn't appear to me that that's going to suddenly stop and the dollar's going to suddenly fall again. I think another thing that agrees with that view is, I know we might talk a little bit about bond yields later, but the 10-year had a false breakout. The 30-year didn't break out. And now bond yields are, they look like they're going to be in a counter trend move for a while, that they could be below those major resistance points. And I mean, that's something, in my opinion, that also supports the dollar potentially moving higher after this correction.
So, Jordan, as we were talking off mic, I mentioned that a lot of the gold bugs are saying, you know what, this is very positive for gold to be relatively just hanging in there as the dollar has been making this move. You point out on the flip side is that as the dollar made lower lows, gold didn't make higher highs. there is, again, kind of this argument back and forth saying this is good, but however, look at this other side of things. You also made the comment that you think it'll be good for gold if the U.S. dollar does continue to move up. What's your theory behind that comment?
Well, the theory behind that comment is that the dollar continuing to move up can act as similar to rate hikes from the Fed. When the dollar had that huge move, I believe, was it 2014 and the first half of 2015. I could be wrong because I don't have the chart in front of me, but that huge move prevented that pushed out the Fed's rate hikes into, the first rate hike in this new cycle was basically December 2015. And they only hiked once for the next 12 months. So you only had one hike until the end of 2016. So, and looking at, I know this is something we talked about the week earlier or the week before that, but to me right now, it's pretty clear that we're not going to see a bull market begin in earnest for precious metals until the Fed stops its rate hikes and moves to a pause and then eventually a cut. And so we have to think about, okay, well, why would they do that? What's something that could lead to that happening? To me, it could be, a breakout in long-term bond yields, which doesn't look like it's going to happen anytime soon. It could be oil continuing to rise much more than it already has, although maybe oil's rise is over. And the other thing would be the dollar just being too strong, going up too much. And I'm leaning towards that scenario as far as what could lead the Fed to stopping its hikes. I don't think that's imminent per se. I think the dollar would have to continue to rise, probably get into the 100s again before the Fed would think about pausing its rate hikes. So it's still a ways away, but the dollar continuing to move higher, I don't see it being that bearish for gold, Corey, because it's gone from 88 to 95. That's not a little blip of a move. That's a pretty serious move, and gold has still held above 1,300 for the most part. I know it dipped into the 1280s, but it did go from 88 to almost 95, and the dollar is still trading around 1,300. So that's very encouraging to me as a long-term gold bull. And if you look at, the reflection of that is gold against foreign currencies, which yesterday actually closed at a new 52-week high by a hair. So I would prefer to see the dollar get that much stronger to see if gold against foreign currencies could continue to rally. That would be really encouraging for gold. Ultimately, what I see happening, Corey, is in the long run, gold may start to go up with the dollar. And, when the dollar assuming the dollar goes up from here and goes up over the next year or so, ultimately gold and the dollar will probably go up together. Gold will keep going up as the dollar rolls over again, if that's the way it's going to play out. That's much more likely to me than this idea that the dollar is going to roll over again and make new lows in the next 3, 6, or 9 months. I don't see that happening, because if that were going to happen, gold would already be leading that action, which it's not. It hasn't broken out yet, despite the huge dollar weakness. So again, I know there's a lot to take on there, but I don't think it's really not the end of the world for me if the dollar continues to rise here with respect to gold. It's held up really well so far, and maybe that would continue to happen if the dollar got up to 100.
Hey, a couple of key things to consider, too, is that while the dollar has been strengthening, and even when it was breaking down, we were still seeing gold put in higher lows. Yeah, it didn't break to the upside, but we're trading in a tighter and tighter range at the top part of the range. So that's encouraging, as well as you pointed out, gold against foreign currencies. We kept on talking about the lack of gold to put in any significant gains versus foreign currencies. Now we're finally seeing that. That is positive, but it definitely sounds like this is going to still be a longer term picture play, because so much has to do with the Fed. And that's an interesting nuance that we've seen over just the last few weeks, is that expectations for Fed rate hikes have really come off the boil. The market was, for the most part, I think, pricing in 2 to possibly 3 more rate hikes, and now it's, the whole way back to, I think, 1 and maybe a little bit. See, these things can change all that much, but it is something to consider, though, isn't it, that the market is pretty quickly shifting its focus. The Fed takes longer to shift its focus, but the market can foreshadow things.
Yeah, absolutely. That's a great point. I mean, you could just watch a proxy for the Fed funds is the 2 year yield. So you can watch the 2 year yield along with the other yields. But again, as a proxy for the Fed, you can watch the 2 year yield. And, it all goes together, Corey, because we've talked about also gold against the stock market. And I wrote an article 2 weeks ago titled Gold's Missing Link. And gold has been trending well against bonds. And that includes total return bonds. Now, gold against foreign currencies, as we noted, yesterday closed at a new 52-week high. The one thing that's been missing for gold time and time again over the last 18 months has been able to break out or break its downtrend relative to the stock market. And that's the real missing link. And so when could that potentially happen? Well, it would probably happen around the time the economy runs into problems, the stock market rolls over and looks like it's going into a bear market. And if that were to happen, what would happen with Fed policy? Well, the Fed would probably stop and eventually they'd go to rate cuts again, assuming inflation wasn't skyrocketing at that point. And so that ties in with my thesis that no bull market in precious metals until the Fed ends its rate hikes. So that coincides with gold against the stock market potentially bottoming and gold regaining outperformance against the stock market at some point. I mean, that's what would have to happen. But to get back to what you were saying, Corey, you don't have to wait for the Fed. You can just watch the market, watch the 2 year yield, because the market will lead the Fed. But I mean, ultimately, the market will price these things in before the Fed is fully done with its hike cycle. But nevertheless, in any case, I do think that at the point, after the Fed's last rate hike, whenever it would be, I think that's the point when precious metals will be really, really close to taking off.
Okay, let's wrap it up with a comment here, Jordan, because we've talked about a number of different markets, and that is kind of the thing, is that we really need a lot of things to line up to get out of this slow market that gold has been in and to truly end that long bear market that it was in, dropping from, close to 2,000 down to almost 1,000. So it was a pretty significant drop. But for all these things to line up, which is maybe a falling stock market, gold outperforming the stock market, the US dollar having some implications on the Fed, this all takes time, doesn't it? So don't necessarily think it's all going to happen, but be paying attention to these little nuances that we're starting to see in terms of market expectations and actual data. You want to comment on that?
Yeah, absolutely. And I think the key markets to watch would be the dollar, gold against foreign currencies, and also gold against the stock market. Those would be, and especially gold against the stock market. That's probably the most important. I'd continue to watch the dollar just because could be the trigger that ends the Fed rate hikes, especially if, what we're seeing in Europe, if that is something that can bleed all the way into next year. Those are the things that I would be watching, because gold is not in, it doesn't appear to be, just given how I'm looking at things, it doesn't appear to me to be in position for this imminent breakout, as you said. I mean, I could be wrong, and maybe Europe turns into a major dumpster fire in the next couple months. I don't know, but I